A few key mortgage rates declined today. The average interest rates for both 15-year fixed and 30-year fixed mortgages took a tumble. For variable rates, the 5/1 adjustable rate mortgage also receded. Mortgage interest rates are never set in stone, but interest rates are the lowest they've been in years. If you're looking to get a fixed rate, now is an excellent time to finance a home. But as always, make sure to first consider your personal goals and circumstances before purchasing, and shop around to find a lender who can best meet your needs. Here are mortgage rates for different types of loan. 30-year fixed-rate mortgages. The average 30-year fixed mortgage interest rate is 3.18%, which is a decrease of 8 basis points from 1 week ago. A basis point is equivalent to 0.01%. The most frequently used loan term is a 30-year fixed mortgage. A 30-year fixed-rate mortgage will usually have a smaller monthly payment than a 15-year one, but usually a higher interest rate. You won't be able to pay off your house as quickly and you'll pay more interest over time, but a 30-year fixed mortgage is a good option if you're looking to minimize your monthly payment. 15-year fixed-rate mortgages. The average rate for a 15-year, fixed mortgage is 2.44%, which is a decrease of 6 basis points from the same time last week. You'll definitely have a larger monthly payment with a 15-year fixed mortgage compared to a 30-year fixed mortgage, even if the interest rate and loan amount are the same. But a 15-year loan will usually be the better deal, as long as you can afford the monthly payments. These include typically being able to get a lower interest rate, paying off your mortgage sooner, and paying less total interest in the long run. 5/1 adjustable rate mortgages. A 5/1 adjustable rate mortgage has an average rate of 3.19%, a decrease of 9 basis points from 7 days ago. For the first 5 years, you'll usually get a lower interest rate with a 5/1 adjustable rate mortgage compared to a 30-year fixed mortgage, but you could end up paying more after that time, depending on the terms of your loan and how the rate shifts with the market rate. If you plan to sell or refinance your house before the rate changes, an adjustable rate mortgage might make sense for you. But if that's not the case, you might be on the hook for a much higher interest rate if the market rates shift. Mortgage rate trends. We use information collected by Bankrate, which is owned by the same parent company as CNET, to track changes in these daily rates. This table summarizes the average rates offered by lenders nationwide. Current average mortgage interest rates. Loan type interest rate. A week ago changed. 30-year fixed rate 3.18%, 3.26% minus 0.0815. Year fixed rate 2.44%, 2.50% minus 0.0630. Year jumbo mortgage rate 3.09%, 3.08% plus 0.0130. Year mortgage refinance rate 3.25%, 3.34% minus 0.09. Updated on April 14, 2021. How to shop for the best mortgage rate. To find a personalized mortgage rate, meet with your local mortgage broker or use an online mortgage service. In order to find the best home mortgage, you'll need to take into account your goals and current finances. A range of factors, including your down payment, credit score, loan-to-value ratio and debt-to-income ratio, will all affect your mortgage interest rate. Generally, you want a higher credit score, a larger down payment, a lower DTI and a lower LTV to get a lower interest rate. Beyond the mortgage interest rate, other costs including closing costs, fees, discount points and taxes might also affect the cost of your home. Be sure to shop around with multiple lenders, like credit unions and online lenders in addition to local and national banks, in order to get a mortgage loan that's the right fit for you. How does the loan term impact my mortgage? One important consideration when choosing a mortgage is the loan term, or payment schedule. The mortgage terms most commonly offered are 15 years and 30 years, although you can also find 10, 20 and 40-year mortgages. Mortgages are further divided into fixed-rate and adjustable-rate mortgages. For fixed-rate mortgages, interest rates are fixed for the life of the loan. For adjustable-rate mortgages, interest rates are stable for a certain number of years, commonly 5, 7 or 10 years. Then the rate fluctuates annually based on the market rate. One thing to think about when choosing between a fixed-rate and adjustable-rate mortgage is the length of time you plan on living in your home. For those who plan on staying long-term in a new house, fixed-rate mortgages may be the better option. Fixed-rate mortgages offer more stability over time compared to adjustable-rate mortgages, but adjustable-rate mortgages can sometimes offer lower interest rates up front. However, you could get a better deal with an adjustable-rate mortgage if you're only planning to keep your house for a few years.